What if I told you, one single institution has the power to move the stock market, crash Bitcoin, and send gold soaring, without buying or selling anything? And most people don't even realize it's happening. Every time the stock market rises or falls, every time mortgage rates change, every time inflation increases, there's one powerful force behind it all: the Federal Reserve. And once you understand how it works, you'll never look at the stock market, Bitcoin, or gold the same way again. Stay with me, because what you're about to learn could completely change how you see money. What is the Federal Reserve? The Federal Reserve, often called the Fed, is the central bank of the United States. Its main job is to control inflation, manage employment, and stabilize the financial system. But here's the important part: the Fed controls one critical thing that moves everything else: interest rates. Interest rates determine how expensive loans are, how much people spend, how much companies invest, and how markets behave. When the Fed changes interest rates, it changes the entire financial system. This directly impacts the stock market, real estate, Bitcoin, gold, and even your savings. How the Fed moves the stock market. Let's start with the stock market. When the Fed lowers interest rates, borrowing becomes cheaper. Companies can borrow money easily. They expand their businesses. They hire more employees. They grow faster, and investors get excited. Stock prices rise. This is one of the main reasons the stock market surged after 2020. Because the Fed lowered rates to near zero. But when the Fed raises interest rates, everything changes. Borrowing becomes expensive. Companies slow down. Profits decrease. Investors become cautious. Stock prices fall. This is exactly what happened in 2022. The Fed raised rates aggressively, and the stock market dropped. Not because companies suddenly became bad, but because money became expensive. Remember this: cheap money pushes stocks up. Expensive money pushes stocks down. How the Fed affects Bitcoin. Now let's talk about Bitcoin. Many people think Bitcoin moves independently, but that's not entirely true. Bitcoin is heavily influenced by Federal Reserve policy. Here's why. When interest rates are low, investors look for higher returns. They move money into riskier assets, including Bitcoin. This increases demand. Bitcoin rises. This is why Bitcoin surged massively in 2020 and 2021. But when interest rates rise, safe investments like bonds become more attractive. Investors move money out of Bitcoin. Bitcoin falls. This is exactly what happened during rate hikes. Bitcoin dropped significantly. Not because Bitcoin changed, but because money moved elsewhere. How the Fed affects gold. Gold behaves differently. Gold thrives during uncertainty and inflation. When people lose confidence in the dollar, they buy gold. When inflation rises, they buy gold. When the Fed prints money, they buy gold, because gold is seen as a safe store of value. But when interest rates rise strongly, gold sometimes slows down, because investors can earn interest elsewhere. However, during long-term uncertainty, gold almost always benefits. This is why central banks themselves are buying gold. They are preparing the Fed's most powerful weapon: money creation. Here's something most people don't realize: the Fed can create money digitally. This is called money printing, or quantitative easing. When the Fed creates money, it injects liquidity into the system. This pushes stock markets up, asset prices up, Bitcoin up, economic activity up. But there's a side effect: inflation. Too much money reduces purchasing power. This is why inflation surged after massive stimulus. The Fed then raises rates to slow things down. This creates cycles: expansion, then contraction, boom, then slowdown, over and over again. Why smart investors watch the Fed? The smartest investors don't just watch stocks. They watch the Federal Reserve, because the Fed determines the direction of money. And money determines the direction of markets. When the Fed lowers rates, assets rise. When the Fed raises rates, assets struggle. Understanding this gives investors an advantage, because markets don't move randomly. They follow liquidity. Conclusion. So the next time you see the stock market rise, or Bitcoin surge, or gold hit new highs, ask yourself one question. What is the Federal Reserve doing? Because behind every major financial move, there's a force controlling the flow of money. And now you understand it. If you found this valuable, subscribe, because understanding money is the first step toward building wealth.